Well, hello, you trader nerds. It is a terrific Thursday. Hope you all are doing well, and it is a great day to be alive. Yes, it is. So good to have all of you here. Let's see who all is in the house. Real traders never trade by themselves, they trade with their fellow nerds. Austin, we got Cactus Ninja, we got Daniel. Hey, Daniel, I got your email yesterday. Good hearing from you. DB, we got Don, we got Donnie, we got Edwin, we got Hal, we got Hugh, Skip in the house, Worm Guy. We got iPhone. We got Josh, maybe J.sh. We got Jason, Jerry, Jordan, Laurent, Matt, Jolly Wally, Nadia, Notional Ed in the room, Rick in the house, Robert, RR, Suction, Trader Nick, and Vicky. How are y'all? Hope everybody's doing really, really well. And we've been working on the plan. First of all, let's look at the market. The market's up 2% today, y'all. Wow, it's like nothing happened, right? Like nothing at all happened. So the market's up 2%. VIX is at 24, so it's still hanging in there. AD is a very strong 422, and market up, and up. And let's look at the big green monster. You know, if I have one regret the other day, I wish I'd have consulted the big green monster during the debacle. I mean, look at this, y'all. I mean, it sit there, it goes, okay, it went into this area, fair value. Look where, I mean, how does this thing work? And then it goes up to the 50. And of course, the 50 is the, the point of contention there. You see there's a battle at the 50 line. It goes up and becomes overbought. Goes up, becomes oversold, but stays in the overbought, comes back down. Where does it come to? Comes right to the 50. Then it comes
Hey,
right
Bobby,
back.
I have a question for you
Yeah.
real fast.
Yeah. Hey, Matt.
So you're
Joshua.
saying you wish you would have consulted the big green monster, but I mean, it wasn't the move that was the hurting, right? It wasn't the like all the positions were safe. It was just VIX.
Yeah, it was the VIX blow up. It was the
So
VIX blow up. But I think, Matt, I mean, my thing was based on what had happened in Japan, I was thinking that we could have went down a lot lower than 4%, right? I mean, so my thing was, oh God, it could get much worse. But I wish I had looked and thought that, hey, perhaps there might be some support in this area right here. And I'm not saying that I would have done anything differently, but it would have been nice to at least looked to see what this looked like on this chart. Because it does look like there was a bit of support right there. And how does this thing? I don't know how this thing works. I just it you know. I don't know. It's looking, hindsight's 50-50 according to Pat Dye. So who knows what I would have done. I don't know if I'd have done anything different, but it's kind of neat looking at that. Anybody else look at it and go, wow, I mean, look at it. It just, I don't know. Maybe it's maybe they all look this way, but it's incredible how it caused these little levels of support and resistance, isn't it? You know, right there, even right here. You can see it battled a while before it went up here, goes down here, pops back off, comes up. Then we have this, and then we got the big opening today. And you would think that there's going to be some more support, resistance right here at the 53.44 area, and that perhaps will tag back in tomorrow. Yesterday, I wish y'all, the market at the end of the day yesterday sold off and the market was down like 1%. Oh, I wish I'd have started another tranche of the Sweet Bobby hedge. Oh, that would have been sweet. And then we would have probably bought the longs today just on this one move up 2% today, which would have been really fabulous to have on additional thing. But we've been working on the plan. Let's see, the updated plan. And so I think a lot of you will be happy that I kind of, I was like, wasn't that bad. Let's put everything back together. Let's just make sure that we tighten up the hedge a little bit on what we do. And I think what we need to do is one other thing I think I need to put in here. We got everything back in here. Treasury bills, and I just put bill instead of treasury bills. It just seems so much easier. I made some changes there. Now, y'all had some suggestions in the room what were some of those suggestions y'all said? We said if we had another VIX spike, what we need to do it, but isn't that kind of included in the circuit breaker? When there's a daily drawdown of 5% or more, it's permissible to close any and all open positions till the market normalizes. I mean, I think that's one thing that we can do. But what I wanted to put back in here also, let me get the plan from 6-7. And I wanted to put this optional hedging back in as well. I think I'll be about done. Let's see, where's the optional hedging? Optional hedging. Let me just put this in there too. Or if we want to have that insurance in there, we can do that. All right, let me copy this. Let me save this as the 8.8 version so that everybody will get the latest version. Optional hedging comes after the black swan hedge. There's hedging. Then we'll put in optional hedging. Treasury bills. That looks terrible, doesn't it? If that looks right. Yeah, that looks good. Circuit breaker. Anything else y'all can think of we needed in the plan? A couple of y'all had a couple of good things yesterday to put in there.
Yeah,
Make sure.
Bobby,
Yeah, hey, Hal.
I think one problem, I mean, it's not that you wouldn't have had to make some adjustments, but your spreadsheet tells you that when the VIX is at a certain amount, you shouldn't be using over a certain percentage of your buying power. But you gave yourself permission to use 50% of your buying power, whereas based on the VIX, most of that time you would have been using about 25%. So you got overextended with all your 111s and stuff like that.
So you think that maybe we need to take out that it's permissible to run it at 50% and that maybe we should go strictly by these numbers here?
Yeah, see, I was following those numbers. I mean, I got up to about 100%, but I didn't have to close anything.
Yeah, you didn't have to close anything, so that's good. And you were going by, where's buying power? You were going by these right here.
Yeah.
Yeah. That's probably right, because going into it, let's see what.
See, my buying power was at about like 22, 23% before Friday.
That's probably good. What does everybody think on that? I mean, it's a permission, not a requirement, but maybe the 50% was too much.
Yeah, I would say especially if you're running the black swan hedge, because what I've noticed with my account at least is once you get to a point where you have so many of those long puts, it gives you so much buying power relief. My buying power drops down so low, even though I have a bunch of naked puts on. And we know that the risk with those naked puts doesn't go away just because we have that hedge on. So I think the other day, Bobby, you were saying something about using the Analyze tab to determine whether or not you have enough hedge in place to add a naked put. I think that's a better strategy to go with versus looking at your buying power.
I think that's good too. Let's do this. Let's take this out then. Screw that. I like it. And let's do an analysis too, y'all. And I'm gonna tell you something. Most people on YouTube will not do what I'm doing and showing y'all the good, the bad, the ugly. I just think it's appropriate that I show y'all the bad part. Because let's look at the account. Let's do a little bit of, let's save this. This is the 8.8 version. And I will post it in the room. We'll take out that. And if we see anything else that we need in here, we'll do it. Let me put optional hedging on its own little thing, kind of make it look neat. Make everything look really neat. There we go. Let's go back to the account that suffered the most, one of them. Let's see, this is the Tasty. This is the one we had issues in. This is the one that had the, you remember the
33 shorts.
yeah, the 33 shorts. And let's just look. So Friday was the second, right? Last Friday was the second. How did we look on the second? Okay. Well, that looked bad. But on the second, wait a minute, is that the second that we did that? The bad day was Monday. How did we look on the second? I didn't think we looked that bad on the second. Let's see what the Greeks and ratios were on the second.
Yeah, it was bad in the afternoon on Friday.
I don't think that was that bad on Friday, though. I'm thinking the big deal was on the. But you're right. Look at this. Let's pretend it was the 31st. I mean, even so, right? I'm still running high. I'm at that 50% level. And I think I was worse than that. No, I think you bring up a great point, though. I think we need to do more like just go by our regular thing, and I think we'll be fine. I also think that I'm going to be a little more selective on data on entry dates too, instead of just doing it. For example, today, is anybody? Robert says, I believe those numbers are based on tasty research. We should follow those guidelines. I think you're right, and I think No Ed's right. Let's do that. Let's do that.
You know, the other thing is when you put on one of those black swan hedges and you're putting on your 3 or your 6 or 9, each one of those is what, about $800 worth of buying power. You said you've got, when you got a bunch of those hedges on already, it's offsetting it and it's making your risk appear less than it is. But while those things are waiting to complete, it's still, when you had 33 of them on, those things were probably using $23,000 worth of buying power before the vol expansion.
All right, so let's get into it. So what we're saying is that lessons learned: use buying power at tasty guidelines. All right. Second thing, use the analysis tools that are available to us. If I had done that, like if I had gone into this account here, let's see.
Another thing is use that initial buying power usage and not the carrying.
Oh, that's good because it's a higher number, isn't it?
Yep. That's the one they display on the main page, is the higher one.
And does everybody know what Hal's talking about? Well, it's in other words, here, there's 2 that they show us. They do this requirement and then the initial requirement.
And they also break it down that way on the app.
Oh, do they?
Yep.
Yeah. Yeah. And one of the things that we need to do, and I'm going to make sure that I do, is look at this risk analysis now that we know how to do it. And let's just make sure everything's updated. Okay. What is this? Take that off. Yeah. So you see now, I certainly, in this account, could sell premium and do some 111s. The problem is the market's up 2%. And I think we got to be more selective in entries. Wait till it's a flat or a down day. Do y'all agree? How do you agree on that?
Well, I don't really, I mean, it'd be nice, but when I have one kind of come off, I put another one on. So like when I have my short close, which I take off at 75%, then I usually put another one on.
But is anyone doing one today? I mean, would anyone say, hey, it's up 2%, I'm going to put on a 111 today?
Well, the other thing is when my short on a 111 is at a 4 delta.
Oh, you're moving your short to a 4 delta?
Yeah, I'm at a 4 delta, and then my debit spreads usually runs about 400 points, 450 points higher than that for the difference between the two short.
Mm-hmm. Okay.
And I'm averaging, I was averaging about 17, 18%.
Uh-huh. Anybody else got something that we think that we, learning lessons going forward?
Hey, Bobby, and
Hey,
hey, group. I got disconnected, so I'm not exactly sure what Hal just said. So, Hal, I hope you got through this okay. You seem like you were set up more conservatively, and I hope you made it through all right. For those that had extreme pain, I just want to offer my really sincere condolences. It's unfortunate. I wanted to back up, like on the. I like number one, like I even typed in there, yes, these tasty metrics should be observed and I think respected. Discord wide, there's a lot of either non-awareness of this chart or blatant ignoring it. And I think part of the problem is because we as individual traders, and then when we group up and we kind of maybe sometimes reinforce each other's maybe not so great habits. And I'm not just saying here at all, I'm saying across the Discord world and among ourselves for those of us who communicate with each other. There can be a tendency to ignore things like this because it's not easy to do those things. Like when the VIX is below 15, it says to do this. And the VIX is below 15 for 4 or 5 months and everyone gets impatient and fed up and says, forget about it, I'm not doing that, or I'm removing that, or it doesn't work, or it's broken, or whatever. But I think they are worth respecting. And then closely tying that to number two, the analysis tool, I think it's really important to combine those two things. And the reason is, your account's set up differently than mine, that's set up differently from everyone else's in here for the most part. There may be some people that are trying to replicate exactly what goes on here. And, you urge people to do their own thing. I'm urging people to do their own thing. That promotes a better understanding of what I think your risk is. But using those tasty metrics will help keep you out of trouble. And then doing your own analysis on your actual portfolio and learning how to do it to the best of your ability, I think is really important because I don't think people can rely on watching you necessarily analyze yours and extrapolate that to their portfolio. And then my final thought is I've talked to so many people in the last few days, and a lot of people, of course, the people that were tracking higher buying power had incineration pain, but even people that were in their 20s had some incineration pain. My buying power going into this at the beginning of last week, and of course I run very low risk, was like 12 or 13. As the trouble started last week, I popped up to like the high teens. And then I even popped up into the 30s on Monday. And I haven't traded through, that was a bombshell event. For those that are saying, oh, was that a bombshell event? Was that a little one? That was a bombshell event. So I want everyone to realize that was the real deal. And I've never actually sat in front of a machine and been trading while that was going on. And it was just mind boggling, even for me, with all the analysis we've done and, on my end, about what happens with the VIX and prices. It was crazy to see what prices did and then see how quickly they exploded higher and then collapsed pretty quickly back down again. And that's what everyone felt. When the ES dropped down 90 Sunday night, and then I woke up Monday morning, it was down 140. And really, by the time I could get to my desk, it was down like two something briefly. And it was crazy. And systems were not working right. Couldn't get into Schwab. I tried to actually sell some SPY puts in Tasty because I had some buying power to do that with. And I could not get filled. And, there's no getting through to these people at times like that either. So I'm kind of blabbing on just to share my experience and what I've seen with others. But even doing your analysis and even honoring those Tasty metrics is not a complete panacea for the risk. And I want to reinforce that comment with, even at Monday's worst, we might have bounced like we bounced up and we're down only 100 before we closed off some more. We might be 1,000 points lower right now than when we were Monday morning. That's the point I'm trying to make. Right. So everyone that's hindsighting, saying I shouldn't have done this, or maybe I couldn't have done that, or I should have done that, or I could have gotten back. You have to realize that Monday, and Bob, you've heard me say this 10 times. Friday, we were sitting on a pinpoint. Like if things get better, everything's great. But if things get worse, it gets worse a lot quicker because the leverage is all stretched already. And then Monday was one of those rare days where it got a lot worse real quickly. The rubber band stretched. I want to kind of emphasize that everything looks rosy now and the VIX is coming back down and no. This Japanese carry trade thing unwound. There's a lot of back and forth overnight with that at night lately. I don't think it's over yet. And so I want to make sure everyone is aware that risk volatility is high. So maybe take your shots, but don't go get full book in 2 days when it might normally take you a month, because the volatility should be here to stay for a little while. And protect yourselves. And what I'm also saying there, and then I'll be quiet, I've talked to bunches of people who are actually running more risk now with their account at 30 to 40 or 50% down than they were running before with higher amounts. So that's a recipe for massive destruction and disaster. So, I think if people are confused on what to do, hit the exit button on everything and restart your campaign where you want to restart it today, right now. I think that's a fairly safe thing to do. And I know everyone's screaming, my God, I'm not taking these losses. These are 1256 contracts. I don't like taking a loss any more than anyone else does. But if I take a $4,000 loss in something and go put another position on, it's kind of recycling. And I'm not saying do that. I'm just saying don't overtrade now versus what you did 2 weeks ago. You should be less 2 weeks than you were 2 weeks ago if your account has taken a body blow. I hope that all makes sense. Thank you for the time.
Thank you, Ed. How high did your buying power get during the vol explosion?
They jumped up to like 90 and 100, but
okay,
I'll just use a small percentage in my like IRA account. So I'll just allocated maybe 35,000 or 40,000 in a particular account. So I can carry more risk than that.
Mm-hmm.
You see, my closest short at the lowest point on Monday was still 1,200 points below the low.
Yeah.
And that's on one I put on like Wednesday of last week.
So it was a new baby. Man, that's great. That's great. Any other lessons anybody would like to bring up at the time? It's good that we're looking at it and we're kind of going back and saying, hey, what should we have done? What could we have done to prevent it? I think these are all good things. Use buying power at Tasty Guidelines. I think Hal brings a great thing. Use the one displayed instead of the initial buying power, or use the initial buying power instead of the carry buying power, which is a higher number. We're going to use the analysis tools to make sure that I'm not saying that you're going to not have any risk to the downside, but at least you kind of have a good idea of what that risk is. And then again, I'm going to be making more selective entries rather than if today is the day that I'm going to do up. It's just hard to put in a new 111 trade on a day when the market is up 2%. It just seems crazy, especially when if you're going to look at the big green monster today, we're overbought, right? And you're going to put in a 111 when we're overbought and the market's up 2%. Auction says he's very wary of creating a plan with no back test and just based on one event. Seems like we just want to do something without knowing it's the right thing. But I think, some back test is like what Hal did. I mean, Hal survived it perfectly. He didn't have to puke his positions, whereas I did. I was showing negative net lick and, the account was going to heck. I had to make some drastic changes. But I think if you had done kind of like Hal did, he got up to about 100% buying power, but he didn't have to puke his positions like I did. So I don't know, we say back test, but that's kind of a live test.
And that's a function of leverage, like how much leverage, how many multiples of our account value are we trading? So that's notional exposure and multiple of that, if you will. Yeah. And that's something that people ought to spend a little time better understanding because, again, I trade low single digits notional and a kind of a diversified portfolio of ES and TLT and a little bit of crude. And that's almost immaterial. But I typically see people at 7x, 15x, 20x, or even more for those that are shooting for very, very high returns. And this is something that, Bob, I've been talking about. That's how I got my nickname in your Discord is Notional Ed, because I talk about these things. And it's however a person wants to understand the amount of risk that they're taking on, they need to get whatever metric they want to use because it's that exponential curve down to the left. It kicks way down on people don't understand what leverage is. So they just put positions on without really understanding what each little position can blow up to in a blow up. That's why I'm also encouraging this analysis tab because, and I'll just throw this in here without harping on it, the 11X is really more like a naked put in a blow up than it is anything. And we've always said the put debit spread's there for grind down protection. Well, clearly the last week has shown the put debit spread's there for grind down protection. It's not there for blow up protection. You get blow up protection if you have one that's within 30 days or 21 days or 2 weeks or something to expiration. Yeah, it can puff up to the full value of that put debit spread width, as we've discussed recently. But other than that, people pretty much probably, I hope people saw their 80, 90, 100, 120, 150 put debit spreads get blown through. I mean, I've seen so many people like meeting with people and like their put debit spreads are like 5450, 5400, and ES was at like 52. And they're like, why is this thing only marking at 18 points? I'm like, because it's got 118 days left and it's not going to give you full credit for that until like 100 days from now. And not full credit until the day it expires. So that's another little lesson I'd like to throw out there is the put debit spread is a great thing for grind down protection, but it is, and you've heard me say this too, Bobby, it's like a Band-Aid where you need a tourniquet or emergency surgery. Like the naked puts are bleeding out so much worse than the put debit spreads are helping. They're virtually irrelevant at that point. And Monday was a clear example of that. I think even last week was a warning of that. So, okay, I'll be quiet again.
No, that's good, Ed.
Yeah, I
Austin
got one
says-
more comment.
Yeah, go ahead, Hal.
Okay, I'm running 5 accounts. This is in 5 accounts, like 3 IRA accounts and 2 regular Reg P accounts. And when I set them up, I allocated $30,000 to $40,000 in each account. And I looked, and I was running 5 or 6 111s in each account.
Mhm.
And like I said, when I set them up, I put them at a 4 delta for the shorts. So, I'm a lot further away in all this stuff.
Yeah. Austin said, what Ed said about patience made me think of the quote from Mr. Buffett. The stock market is a device to transfer money from the impatient to the patient. That's good. Steven says could almost drop the PDS and sell around 1/3 less total naked put for similar credit. That's something too.
And that's exactly what I've morphed to. And Bobby, nobody loved the put debit spread more than me. Nobody.
Mm-hmm.
But I've just cut back on the nakeds that I'm willing to sell. But I run low notional risk. And I love what Hal just said related to that. Is like Hal's trading a much further away from the market strategy, and how I may not be nailing it correctly. And so he's kind of buffeting himself from some issues. But if Hal put twice the amount of positions on than he does now, he's still got the same blow upness as like everyone else would have had, if that makes sense. And I'm not telling just Hal this. I think Hal's more than well smart enough to understand. But for those that are listening, it's the amount of positions you put on. If you're selling 2 111s because that's all your whatever X $1,000 account can handle, don't go sell 2 naked puts now. I mean, because you don't even have the drawdown. You have to adjust all these and take it into account and scale it to your risk. And that goes back to that number 2 that you had drawn, the Analyze tab. I'm not an expert at the Analyze tab. These things take time and there's all kind of little nuances, but fiddling with it and playing with it a lot is way better than ignoring it and pretending like you don't need to use it. And
well, it really goes back to the tasty metrics, because that's what determined how many of these 111s I could put on.
Hal, what do you think about the put debit spread? Maybe doing away with it and just selling less nakeds, because the credit that you're going to get for the whole thing is better, and you just have that less notional exposure.
Yeah, it probably wouldn't have impacted me much. I only had one of them actually, one of my debit spreads actually go into a positive value.
Really?
And that was early Monday morning, and I couldn't close it. And it would have only been about $50 or $60, but it only had about 9-10 days left. No, it had 11 days left.
Mm-hmm. That's why on the first amended plan that I had, I just said selling 60-day puts, doing it at 50% profit or 2x loss, and totally doing away with the 111, 112. But then after I thought about it a while, I was like, well, we can bring the 111 or 112 back. But yeah, I could see doing away with the put debit spread. I mean, I guess the thing is, in the grind down, what happens then? We go, oh, I wish we had the put debit spread.
I agree with that. And this is part of that hedge or no hedge thing that we all ride that wave month after month, up and down, year after year. And, I've run the put debit spread. I've run it real thick and heavy. I've run it not at all. I've gone back to it. I've gotten away from it. I've gone back to it and gotten away from it. So it's really hard to figure out, but it is adding, if you pay 28 or let's say 30% of your net credit to a put debit spread, you kind of do have to sell about almost 50% more premium to get the same amount of money coming in, which, as we just saw, shows that the put debit spread laughs at you as the price goes by and does nothing for you because it's not in a position to do anything yet. So it's a mixed result. And then, when we buy the 25 delta, and then sell 50 points out or whatever you're trading, but you know what I'm saying, 50 points, you generally create a 50 wide put debit spread. The 25 delta says you have a 25% chance of this strike being breached, which is a 1 in 4. But like Hal just said, even in this crazy debacle, and I don't know how many positions Hal has on, most of his put debit spreads were somewhat irrelevant. So I'm not saying get rid of them. I think it's another individual choice, but I do think I know for sure people over rely on the put debit spread just like I used to. And if you add on top of that, the bear trap hunting, everyone's into the bear trap hunting and I've been saying for months, like when you lay a bunch of bear traps, you can accidentally step in some of those bear traps. And I saw bear traps go from break even to slightly positive to down 1,000, like each one. And I've talked to a zillion people who that's what they were using there for protection. A bunch of bear traps, 111s, XL 112, whatever. You know what I'm saying? It was all put debit spread hunting. And it's not a good hunt. It's not a good hunt. So I'm reiterating what I thought was already pretty obvious. But for those that think bear trap hunting is cool, fun, and exciting, it is adding a ton of extra risk that might actually blow your account out. I talked to someone who had 50 of them on, and they lost over 50 grand just on those. They had to rip it all off because they were way over 100% margin. They had to rip all of those positions off plus more. And they actually concluded that the bear trap.
Oh, Ed, you broke up. Ed broke up a little bit.
Sorry, their conclusion was like the extra 50 of those that they had on really is what blew up their account, when in their head, that was their protection. So again, it's up to each person to do what they want. I'm not saying don't do any, BA 112s, or I do stretched 111s or whatever. I'm not saying abandon the put debit spread. My main point is when you have anything that's naked, it's naked. You can put whatever you want in front of it, but it's still naked. Now, if you build up a nice long put campaign, i.e. your Bombshell hedge program, and it's executed to the T, then you'll do the analysis, Bobby. Everyone can watch how that looks and how it goes. And then we'll see how it performs in the next move, whenever it happens. Not if, but when. It's a matter of time. So it should be interesting, but don't just go abandon, not you, Bobby, but listeners, don't just go abandon everything unless you're exiting this. If you don't want to do this anymore and you want to go back to long-term buy and hold and you don't ever want to do this again, do that. Everyone has to decide. Do not overtrade. Do not revenge trade. Everyone's heard don't revenge trade. They must not know the definition, because I'm telling you, about a third of the people I'm interacting with are harshly revenge trading, and they don't know it. They're getting rewarded nicely today. Good. That's terrific. We don't know what tomorrow or even this afternoon is going to bring. So, be careful.
Yeah, very good. Gary says before the disaster, to help balance his deltas and because he thought trouble was near, he put on a lot of call credit spreads at around 10 delta. They helped him a lot. He took a big loss, but they helped him. Might include that in the plan. Yeah, that's something to do too. Like, for example, if I wanted to sell premium today, then it would make sense if the market's up 1.66 and it was up 2%. Hey, that's a great day to sell a call, even though as much as I hate calls. Austin says if DB is here, he would love to hear from him on how he did with his low delta 111. DB, are you here? And Paul says all of his PDS were irrelevant and bear traps did not work on long days to expiration. Yeah, I mean, not until they're at expiration, that's for sure. That's interesting. Yeah, we might even, like you say, do away with them and just sell less naked puts.
Well, most of those bear
Bobby,
traps that that you'd completed the shorts and closed out the shorts on, because the market's been steadily going up for months, they're so far out of the money, they don't help you at all right now. If the market had been flat for months, then they might have had given some help. But those things were 1,500, 1,800 points out of the money, even at the lows.
Yeah, yeah. All right, good discussion today, y'all. Let's keep it up.
Can I,
Yeah, Ed, go
Bob,
ahead.
before you go, I just want to ask Hal a question because auction's asking if DB is here. I mean, Hal, are you not running a really low delta program?
He said
Yeah, my
4
shorts,
delta.
when I put them on, are about 4, at 4
Okay.
delta.
All right. So I just want to tell auction here that I think what he heard you say earlier is what a low delta campaign, that's how it would perform. And how, what did you say your buying power was kind of going into like maybe Tuesday, Wednesday, Thursday, somewhere around then before it really exploded?
Thursday, most of the accounts were like right at 20, and I think it was
Okay.
showing you could be at 25.
Okay. And see that that again for auction is relevant. Your campaign's way low delta and it's relatively low buying power, and you still hit 100% margin. And that you're like maybe the 20 something person I've talked to who like, yeah, I was at 18, I was at 22. I never go more than 25. And I was at 170 and lost 50 grand. Like, you know, like it's hard to say what these numbers mean, but that's where I'll fall back to the tasty metrics need to be incorporated with more respect by everyone. Bobby, you already have them in there. We all tend to ignore them. Again, when the VIX is sitting there at 12 for 4 or 5 months, you know, it's hard to sit on your hands and trade small, you know. But that really is somehow what we're supposed to be doing.
Mm-hmm. Mm-hmm.
In your account, Hal, were you running the Black Swan hedge at all?
I had a small one. When I put them on, I put on like I sell one short, and then when when I can do it, I just buy 2 longs. So I had three or four of those in each account. I had one that wasn't complete in each account.
Okay, so small hedge there, it sounds like. You didn't have like a big wall that you were building up?
No, and one of those, I think, yeah, one of them went up to about $375 at the worst point. So it wasn't giving a lot of buying power relief.
One
I
thing that
think
I
it still had
noticed,
44 days on that, 44, 45 days or something like that at the time.
another thing that I noticed with my accounts, Hal, because you mentioned trading IRAs and regular margin accounts, was my buying power problems were all in the IRAs. My margin account was fine, even though it was about the same size as one of my IRAs, and I had the same number of naked puts on it. The buying power requirement just exploded so much more in the IRAs, and I didn't have any sort of black swan hedge or anything like that. I was just selling naked puts.
Yeah, it's because they don't give you that extra relief in the IRA account. So, I mean, it might be when you put on that naked might be 12 or 15. A 4 Delta might be $1,200 dollars in buying power when you put it on at 120 days. And when you put that same thing on a Reg T account, it might be 600, or it's probably about more like 800, but it's like 30% difference.
And what I did to bring my buying power requirement down was I just bought a 1220 BSH starter. And in my IRA, my buying power was at like 97% when I did that. And after I purchased that hedge, it went down to like 57%. So it knocked like 40% off of my buying power requirement. And I did the same thing on my margin account. That guy, it was probably up to about 38% buying power usage. And it only dropped it down by like 10%, down to 27%. So those BSHs, they really help to bring down your buying power, especially in the IRA.
Okay. Good conversation, guys. Keep it up. Let's come back tomorrow and let's keep thinking, right? This is what this is for. We need to stay together now and kind of figure out a common way of doing things.
What's a starter BSH? Matt?
Oh, when you start one of the Black Swan hedge campaigns, the traditional recommendation is to sell 12 puts and then buy 20 puts. So that's what I was referring to when I said starter BSH.
Oh, all at one time. You don't wait for the shorts to or the longs to get cheaper, I guess.
Right,
Exactly. Yeah. When
you pay up front. So you pay, what is it, Bobby, about $1,500?
Mm-hmm.
yeah, it cost me about $1,000 the other day. That's your just initial upfront cost. But then once you have that starter going, then you can start adding them for free by just selling the nakeds and then waiting to buy the longs after they've decayed enough.
And you're using Toss or Schwab or or Tasty Trade.
I use Tasty.
Okay. Is everyone mostly using Tasty for their IRAs now?
I use both.
Because I have all my IRAs at Schwab, I guess now.
Yeah, I do too. I've got most of my accounts there. I didn't change over.
But I noticed that also that the buying power requirements went way up on my IRAs.
They went up everywhere. And, you know, the exchanges set the buying power requirement on these things. And then the brokerages take that and either modify it to more conservative or whatever. So when volatility explodes and the market explodes, the exchanges and the brokers are going to raise margin into that. And that is another risk that needs to be contemplated going into these things. Because again, even with my low, I mean, like I had to keep selling bill, sell bill, you know, because I just cover enough to meet the additional margin overnight. And every day it's like more and more and more.
Yeah, I had
And
to do the same thing.
and it wasn't always related to price. So that's what's happening under the surface, are the exchanges and the brokers actually changing the margin. So they're making it tougher on us when the dynamic of the market, price and volatility, is already making it difficult on us. And there's really no limit as to what they can do. And I've actually had a handful of people say it feels like the system is rigged against us because we have limited resources versus big institutions. And I have no comeback to that, except incorporate that into your mindset. Realize that your you know, X amount of margin on an option or the futures contract itself could go way up in an almost unpredictable manner. Again, imagine the VIX had gone up to 65 on Monday, came down to 45, but closed at 100 and went to 150 the next day. Margins would be exploding. There'd be so much devastation than even there was. It'd almost be incomprehensible. So all that stuff, it's heat that turns up the exponential pain curve all at the wrong time, all coming together at the same time. I'm not trying to scare people off, but to be very aware, or as aware as you can, of what's going on here is definitely worth some time and thought process.
The other
And
thing
then, yeah, I'm
oh,
sorry.
Go ahead.
This Austin auction guy said, I sat in bill for 8 months feeling like a chump, but I don't now. To that, I only want to say this is another, you know, the community, there's nothing like these communities for building exchange ideas and camaraderie where we'd otherwise be in isolation,
Yeah.
helping each other think and be aware of things and sharing our experiences and learning. But ultimately, we have to get up from our desks and go look at ourselves in the mirror and our spouses, if we have them, and realize what we're doing is real. It's real money to us. There's almost like a tendency in this herd mentality of Discord world. And again, I'm not just referring to you, Bobby. You, and I'm sure a lot of your listeners know I'm kind of all over the place, including in my own. It's a matter of, it's like ignoring the low VIX. We all do it, so it becomes complacent, and everyone's doing it, so it must be okay. And then all of a sudden, it's not. So, you know, remember, your money's not play money. It's not monopoly money. Sometimes it might feel that way, but it's not. It's real money with massive ramifications. There's some people out there that, I mean, their life has been altered by Monday, and it may or may not recover. not in just in Discord land, but you can rest assured lots of people lost lots of money. That's all I have to say. And I'll conclude and hopefully not use my vocal cords anymore here by saying, remember, we're not out of the woods yet. Today's glory, and we may be out of the woods, but we're not. So if you're over trading, take this opportunity to stop over trading and realize you're going to need some time to recover from this if that's your plan.
Yeah.
And good luck, everyone.
All right, guys, good session. Let's continue it tomorrow. I hope to see everybody at the same, at 2:00 tomorrow. And it's good to have a community where we can come and share together. Y'all be good. I'll see everybody tomorrow.